Alright, welcome back. I think I'm gonna speed through this as fast as I can. Okay, so this video will be the weekly forecast. Right, because ES right here has closed above the consequent encroachment of this daily wick right here, my primary bias is above. Okay, first off, I'll be looking for this buy stops, and then after that I'll be looking for this buy stop. Alright, right here we have a SMT with Nasdaq. Over here Nasdaq made a lower low, and then I think for Nasdaq as well, buy stops here and the volume imbalance. Similarly over here, and then there's a volume imbalance above, which is right here for ES. Alright, the dollar index, because on the weekly we have this balanced price range here, and it took out the sell stops with just a small step below. Okay, just a little step, right? So this can be considered equal lows, right? Right now I'll be looking at this balanced price range. Okay, for continued bearishness, I do not want to see the XY trade above this balanced price range, right? So at most this area, this BPR should cap price going higher, and then it's gonna come down again. I'll be looking at this BC right here for the weekly, and on the daily I'll be more focused on the consequent encroachment of that monthly fair value gap, the bullish fair value gap, right? So it's just right here. Right now we have stepped into it the second time. Okay, so we still have lots of room above, because we have this volume imbalance. There's no body overlapping it yet, so price may still gravitate back to this level here, and we have a huge fair value gap right here. Okay, an inefficiency that can be used for targeting heading into the third quarter of the year. Okay, furthermore, we're in this breaker, okay, the monthly breaker. So on the daily time frames, what I would like to see for dollar would be a trade up into this area, maybe tapping into this balanced price range, right? This fair value gap was used to push the price higher before in February, so I'm looking at this to be an inversion to push the price lower. Okay, and once it goes lower, I would be looking for SMT, right? Because we're in second quarter of the year, that's where the manipulation happens usually. Okay, right, for euro dollar, we have the range here. This is a sell stops. We have relative equal lows right here, and above it's buy stops on the weekly. So I'm thinking that this is probably the next draw on liquidity, and we have this volume imbalance as well. No body has been closed, has been overlaid. Okay, therefore price can gravitate back up to this area again, because it's gonna act as a magnet. Clear? Right, and on GBP, same thing here, buy stops here, and then we have a fair value gap above. Alright, GBP, it's more bullish than euro, so I'm expecting higher prices into this area here heading into the rest of April. Okay, let's break down a little bit on ES. Right, so yesterday was interesting. it bounced off this order block right here. Okay, so these 3 down close candles are your bullish order blocks. Okay, once price traded through this candle here, so came back all the way down, tapping the opening, and then rejected strongly, closing above that mid-range of this wick right here. Okay, I don't really want to see this swing low taken, but I do understand that there is a weekly BC right here, so I don't think it's gonna be reached into just yet, right? Due to that SMT that we are having against Nasdaq. Alright, I'm looking for buy stops first. So heading down into the lower time frames, let's start with the 6 hours. Right, so for 6 hours it reacted very nicely off this order block right here. Okay, opening and then rejected, closing above this fair value gap right here, which is what I really like to see, right? And I think next week we target the highs above, right? Similarly on 4 hours, it's not that clean, but I mean not as clean as the 6 hours, but it works pretty much the same, right? So whenever you see a candle closing back inside this fair value gaps, if you're bullish, see a down close candle like this closing within that fair value gap, the next 4 hours candle or the following candle, I would really much expect price to reject and close outside of this fair value gap in the direction that I'm anticipating for confirmation. Okay, if price does not close above, or right, it signals weakness in this fair value gap, and I think that's where it's quite a low probability. The maximum I usually give, it's 2 candles after the closure. So let's say if this candle, right, closing within this fair value gap here, I'm giving price 2 candles, 1 and 2 candles to close above, away from that fair value gap. Okay, that is what I've noticed for my back testing and journaling, right? In best case scenarios, you would like to see the next candle displace away from that fair value gap, right, to signal that okay, you are on site, right, you are in sync with what the market's gonna do. So this type of action right here, it reduces your risk, right? Let's say you put your stop loss here. If candles are not reacting to your fair value gap right here, you could exit the trade around this area here. You do not have to go to the full stop. Okay, what I'm trying to say here, it works really nicely on the lower time frames. You just have to try it out. Okay, so on a 1 hour chart right here, as you can see, we have a small little fair value gap right here with a breaker. Okay, price closed above and within the fair value gap, and the next candle displaced in a opposite direction if you're bearish. Okay, so it displays a opposite direction. So right now it signals that okay, this is not the shot that you really like to take. So you could have closed here and wait to see what price reacts. I mean, to wait to see what's the price action forming, right? Because right here you have a order block, and you have the 50% right here. So it could give you an exit near to your entry, right? And you're gonna wait for confirmation lower because your stops would be here. So right here to here, that's a lot of points that you're potentially risking. Okay. So once you see price action that do something like this, you're very well on the wrong side of the market. Okay. And once you see this, it's better that you make a decision to either close partially, reduce your risk, or close the entire position and then wait for confirmation of lower prices. Okay, on the 15 minutes as well, right? So right here, price closed within that fair value gap over here. This is a bearish fair value gap, and then the next candle, it closes within the fair value gap. It did not displace lower. Okay, so this means that it's a sign that it's a weakness for the bears. Okay, it's strong here. It's really strong, right? Price is refusing to close below the fair value gap on the next candle right here, right? So this is why this is how I would like to trade. Okay, and yeah, on the 15 minutes, I'm expecting a retracement, maybe into this fair value gap before higher prices, because we do have a balanced price range here. It might want to reach to the lows, okay, or even the consequent encroachment, which is right at this fair value gap right here. All right, this is a balanced price range, used to be a bearish fair value gap, returned back up, failed again, and then shifted lower. All right, over here, not too sure if it's gonna give us an entry here. Could swing low to swing high. This would be the best entry, right? We have news on Monday, so let's see if we can come back here, this area here. Okay, that's for the lower time frames. Sunday's opening, I'll just wait. All right, and I think that's it for this video, and have a nice weekend. I'll see you in the next one.